Welcome to Chase Profits, your top choice for market updates and chart analysis.
Welcome back to Chase Profits. Just wanted to talk about some news in the crypto industry here. They just came out with an article that talks about JP Morgan saying that MicroStrategy and other crypto-treasury stocks are not the right move because the S&P 500 just rejected MicroStrategy's inclusion. So if we move down the article here, it says MicroStrategy and other crypto treasury stocks remained in focus on Thursday after JP Morgan analysts sounded the alarm on investing in companies functioning primarily as Bitcoin funds rather than traditional operating businesses. Their warning arrives shortly after MicroStrategy faced rejection in joining the S&P 500 index, despite meeting technical requirements, which JP Morgan dubbed a major blow not only to MSTR, MicroStrategy's ticker, but to other corporate crypto treasuries as well. Very curious what everyone thinks about this. I don't think news like this comes out for no reason. I think it's fair warning for anyone holding crypto right now. It's interesting the timing of this right at the inflection point in the graph. It says this development could have far-reaching implications as other providers might reconsider their approach to including crypto treasury companies in their indices. And then it talks about why JP Morgan is against investing in crypto treasury stocks. To begin with, JP Morgan cautions against investing in crypto treasury firms mostly because the sustainability of that corporate model is increasingly being questioned. There's a lot of internet scrutiny, a lot of YouTube videos about the Ponzi scheme nature of MicroStrategy, so this is what they're talking about. The big banks certainly know what's going on down here on the ground level. They're watching, they see everything. And the article goes on to say, the traditional correlation between Bitcoin's price movements and crypto-related stocks continues to intensify, creating heightened volatility risk for these equities. Recent market data signal crypto treasury companies are seeing increased scrutiny from traditional financial institutions, with the NASDAQ implementing stricter supervision on firms pivoting to become BTC proxies. Remember Charlie Munger and Warren Buffett are very anti-Bitcoin. Rest in peace, Charlie. According to JP Morgan analysts, these crypto stocks also run the risk of overcrowdedness and investor fatigue, which makes them even less attractive to own in the second half of 2025. Ding, ding, ding. Warning shot. Be careful. I would sell just based on their statement alone, to be quite honest. Forget the charts. And then how JP Morgan recommends playing crypto stocks from here on out. For investors interested in building positions in crypto-related stocks, JP Morgan prefers companies with real operating businesses like exchanges or miners, aka BMNR, Bitminer, Tom Lee's company. Pay attention to Bitminer. It's been up from $5 to $40 since the crash in April. So paying attention, keep an eye on that one. I'll probably do a video on BMNR, Bitminer, at some point soon. According to its experts, the market is demonstrating increased sophistication as investors begin to differentiate between companies based on their business models rather than merely their Bitcoin exposure. Companies like Galaxy Digital, up 65% year-to-date, and Bitfarms, up 35% year-to-date, have seen substantial gains driven by strategic moves into artificial intelligence and high-performance computing sectors, while pure BTC treasury vehicles have experienced notable declines. MicroStrategy shares remain up more than 12% year-to-date, but are off nearly 20% over the past month. JP Morgan strategists led by Nicolaus Panagertsoglou say the decision by S&P Dow Jones indices last week not to promote the company that's now called Strategy into the S&P 500 and into the SPX, even though it meets size and other key requirements for inclusion. I'm not going to go on and read the rest of this. The only thing I'll mention here is NASDAQ, they note, has reportedly begun requiring certain companies holding crypto assets to seek shareholder approval before issuing new shares to fund crypto purchases. So that's interesting because that's kind of taking a warning shot at crypto company MicroStrategy, because MicroStrategy just keeps indiscriminately buying more and more Bitcoin, even when it's falling sometimes. So this whole situation should get interesting. This video is running over 5 minutes here. I want to keep it short. So let me know what you guys think. But I think that is a big warning shot for crypto.
Thank you for tuning into Chase Profits, your top choice for market updates and chart analysis. Like and subscribe for frequent content.